Hey y'all, my name's Rafi and welcome back to another episode. Today we're going to talk about stock investing, particularly on what sets stocks apart from other assets, the investing strategies implemented by institutional investors, and the mindsets that you need to invest wisely and prudently. So today we've been inviting Aldo Benas of Deutschebank. He works as institutional equity sales, and today we're going to talk about the real stuff. No fluff. So sit back, relax, and enjoy.
Oke, udah, alright.
Oke,
Oke. Jadi kita mulai. So, pertanyaan pertama, first question. To start, what do you think sets stocks apart when compared to other assets like property, gold, etc.?
I guess one of the best way to explain, what sets stocks apart from, the rest of the asset class. Yeah, I think it's more on the liquidity, right? With stock actually, you can buy a fraction of a company. I think it gives you a very an affordability, basically, to own a company in a fraction size, right? With let's say with property, right? If you want property, you need to spend how much? The minimum if you buy property in Jakarta, right?
Yeah, that's true.
Amount of money you need to spend around 300, 500 million rupiah. But with stock,
500 in Jakarta?
I don't think so. But I mean, like if you can get a very very small
Oh yeah, that's true.
location, not so prime, but 500 is I think the very minimum, right? Or even you can only get 500 million worth of a house in BSD probably, or in Serpong area, or in Tangerang, I don't know. But with with a very small amount of money, you can actually own a fraction of a company, because like I think in the IDX, right, you can buy only one lot. One lot consists of 100 shares. So I think with only 100,000 rupiah, you can actually own a company. And then if you ask me what distinguishes stock with, let's say gold assets, right?
Yeah.
I think it's about liquidity. I think the with gold, right? If you buy a gold in a jewelry store, when you buy it, I think the very next day, if you want to sell it, you need to have a very quite a big of discount, if you will, if you want to sell it again to the jewelry store, right? So basically, the spread between this asset, right? You name it, gold or property, right? I think are a bit bigger compared to stock. Again, it's because of the liquidity. Again, I think at some point you mentioned about compounding factor of all these assets.
Yes, yeah.
Compounding factor is pretty much the same to all assets.
Oh.
It's pretty much the same. It's just back to liquidity, right? The velocity of money, you can get more compounding factor. So liquidity is key. If you cannot liquidate your asset, and you cannot get compounding factor as fast as you expected. And also with stock, right? I think stock is a representation of a company's fundamental, company's performance, company's financial, right? I think if you are a believer of a company, let's say you like a business model of e-commerce or financial technology, or taxi companies or whatever, right? If you like the business, you kind of understand, you kind of know, where the growth trajectory is going to give you. Then you as an investor put money there and just wait. Then you can hopefully you can not only get the capital gain, but of course the dividend if the management decide to distribute or share you a dividend. With gold,
Yeah, no dividends.
you cannot gain any dividend, right?
That's true.
You kind of get dividend if you can, rent it out to somebody else. You can get a rental yield.
Mm. How about the yields? Do you think the yields are bigger with stocks than they are with other assets, or do you think it's dependent on certain factors?
It does really vary. Uh, Again, for me, it's about liquidity, right? With stock, let's say you own a stock where everybody is talking about it. For
Ooh.
example, Tesla, right?
Yeah,
Elec-
true. Yeah.
Everybody is talking about it. Everybody is a believer of electrical vehicle in the next 5 to 10 years down the road,
Mm.
right? So if you compare to, let's say, a property market, right, where actually the price is not going anywhere for the past 3 to 4 years.
Oh, really?
Yeah.
Oh, wow.
So why would you even want to invest your money in property? So
Mm.
just buy stock, or I think it's still a better investment opportunity to buy gold at some point. Again, I think one of the reasons why you actually want to own a property is not because you expect the capital gain out of your investment. Hopefully, your property, your house will be you can get something out of it, right? But I think one of the why you buy a house is because you want to live under the roof, right?
Yeah, that's true.
But you need to set a mentality where there's a distinguished element of owning a house. Owning a house is, one is your primary needs, like food, like clothes, right? House is actually one of it.
That is true.
People speculate on properties.
Oh,
They want money, then they want to buy property, more and more and more and more properties. One of the reasons why there is a property bubble at some point is because there was a commodity boom. People make so much money out of having a coal mining, having a gold mining, having a CPO plantation. Then they own so much of this money. Then what do they want to do, right? They don't know what to do. Like the old and traditional mindset people, right? I think if I'm rich, if I'm wealthy, let's buy a property.
my property. Yeah. Hmm. Whew. Wait, so let's go back to like what you said about liquidity. When you
Right.
said that liquidity affects like the compounding factor, why do you think so? Like, and how? How does liquidity like let you get compounding? And if you don't have liquidity, it's not as much.
Right. Let's say you have a $100 amount of money, and then you buy a stock, and then at some point you can sell it at 105, right?
Yeah, that's right.
In 1 month period of time, right? That means that within 1 month period of time, the money from 100 become 105.
Mm.
And then with 105, you can actually invest in other stuff again. Let's say you own a deposito worth of $100, right? And then the yield, the 5% yield, you can only get within a year period of time. So your money become 105 as well, but a year later rather than a month later.
Yeah, true.
So within this 11 months, between you invest in stock and then you own this money become 105, right? You have an opportunity to invest in other stuff.
Hmm.
You might gain something out of this investment.
Oh, I see.
But,
Yeah, I see.
but when I mentioned about liquidity,
Oh,
the compounding factor also affected by the velocity of money, which is the speed of your money circulation.
hmm. I see.
Because at some point, if you buy a property, right, I really hope, day one you buy a property, tomorrow you can sell it as easy as you want it, right? But in reality, there's no way you
Yeah,
can.
it's not that easy.
But with the stock that has so much liquidity, right?
Hmm.
The second you buy, and then the next minute you want to sell,
Yeah, you go.
done.
I see now. So I think, is that true in Tesla? Do you see that in Tesla? Like the reason for their amazing growth is particularly because people like to sell and buy it so much that it can increase to
Yeah.
such prices.
Yes, it's as simple as the demand exceeds the supply.
That's true. That's true.
People who want to buy the stocks actually more than people who want to sell the stock.
Yeah, that's true. Okay, I see now. So, shall we move on to the next question?
Sure.
Okay, all right. So, I heard that the investment community is divided amongst two groups, right? The retail investors, which is like the individual, and then there's the institutional investors, which is like the institutions. So now let's first talk about like the institutional investors. Who are these institutions really? And what do you think motivates them to invest in the stock market? Like, what are their incentives, their motivations to
Okay.
invest particularly there?
So basically, institutional investors are just, a set of people who gathered in one institutions, right? And there are several institutions, the likes of insurance company, asset management, hedge fund, endowment fund. They are actually institutional investors. Institutional investors are people who manage others people money, institutions money. For example, with insurance company, right? You buy a policy from insurance agent. You pay on a monthly basis, right? All this polish.
Yes, yeah.
This money will be channeled into two, right? First, to cover your whatever coverage you buy from the insurance company, and second of all, if you've heard about the unit link and whatnot, they will invest this money that you pay from the police.
Oh yes.
Yeah.
Yeah. I heard.
One of it is through stock market. Mostly are actually through money market or bond market. So actually stock market, the money coming from insurance company actually mostly going to this bond and money market. Only 15 to 20% going to stock market.
Oh.
But management, you sell what is it called? The mutual fund, right?
Yeah.
As an investors of mutual fund, you expect that okay, if you want to buy IDX 30 or LQ 45 index, right? You pretty much buy all these 45 stocks. So these are the institutional investors, people who manage somebody else's money within, right? So basically, it's a liabilities from them because they need to manage this money.
That's true, yeah.
And make sure that they can gain good return. Right? What sets apart institutional investors from individual investors? Actually, not really. Not much actually. It's just the access of information that they could get.
Oh.
As an institutional investors, you kind of like gain more access because the amount of money that you manage are actually much bigger.
Much bigger, yeah, that's true.
Right? So as a let's say as a company, right? Let's say of let's say a big banks, right? To speak with one fund manager who owns 1 trillion rupiah rather than speaking to 10 or 100 investors who in total only manage about 1 billion rupiah. The amount of time that I need to spend as a management, as a big companies, right? With this 100 people versus to speak with this.
That's true. Yeah.
Rather to speak with this 1 or 2 people, right? But I think recently, during this COVID-19 situation, pandemic and whatnot, right? I think the rise of retail investors are
Yeah.
going up. Yeah, I think people are getting more affluent to invest in stock market. I think technology, right? The access of
Yeah, absolutely. Yeah.
you get not only, I mean, through social media, through whatever media subscription that you can actually pay. I mean, it does help for retail investors to invest in stock and information, right? So I think investing in stock market is about formulating your theory, your hypothesis, with a very limited amount of information. At the end of the day, you need to make decision whether you want to buy or you want to sell or you want to hold the stock. So again, I think there are not much difference between these institutional investors and retail investors. It's just the set of information, the access of information that they could get. I think the closer you are with the management or the information that matters to the stock movement, I think that's what you want, pretty much. So that's what sets apart between the institutional investors and individual investors. But it doesn't mean that as an individual investor you cannot gain as much or even more than institutional investors. Because at the end of the day, institutional investors are actually people as well, right? Fund managers, individuals.
Wait, so you mentioned about like holding big capital, right, for the stock investments. So does that reflect on their investment strategy? Don't you think they'll be more conservative with the money they have, considering it's someone else's money, and they have to like make sure that it's like profitable?
Right. Yeah. It's because of the risk factor.
That's true.
When it comes to investing money, right, managing others people money, you need to think about the risk management. Right? There is some speculation part of it, but you need to maintain to reduce this part of speculation. The bigger amount of money you have, I think the more careful you need to be.
Yeah, definitely.
That's what I'm saying with the risk. Let's say as an individual, it's your own money. If you want to put it in let's say a very high growth company, but with a very high risk of default as well, because this business model is not proven yet, but you believe that if this works, company can skyrocket, but chance that this company might bust as well.
That's true.
Because if you think about it, right, I think those companies who are actually listed in stock market, pretty much they have track record already.
Yeah, that's true. Yeah.
Already, their profitabilities are measured. The growth, yes, there are some growth, but I don't think they are in the stage where the growth is still, very volatile. Unlike companies, right? Startup companies might have negative earnings, negative profit, but live in it, right? That's why they can still get a very high valuation as well. But chance of the startup company to go bust is actually also high. I'm not a believer that if you invest in a high risk company or high risk asset, you might get a high return as well. People are high risk, high return, right? Yes, there are some high risk, but you expect you gain high return because you invest in something that is very, very risky. But it's an implication where if you invest in high risk stock or high risk asset, immediately you will get this high return. No, it's
Oh, uh,
it's not that if you invest in high risk
yeah,
asset,
yeah.
high return. It's about managing the risk.
Hmm, I see. So you're saying the cost of the risk that you hold with these high risk companies is certain. However, like the high returns you think you can get is still uncertain. It's still to be proven.
Yes,
Hmm,
correct.
I see.
I mean, let's say if you invest in a high risk asset, right?
Hmm.
I, I mean, I really hope people who invest in high risk asset, they have a very high tolerance on that risk itself.
Hmm,
I,
that's true.
I hope those people can sleep well every day, every night.
I see. Hmm.
About risk tolerance, each individual might have different risk tolerance, right?
Hmm, that's cool. Yeah. So like with your experience in the stock markets and with institutional investors, you think that like institutional investors are more like conservative with their money, like generally?
Uh, so I mean, institutional are also divided, right? I mean, like there are the long investors, there are hedge fund as well.
Hmm.
Hedge fund, I think they play a lot of asset class, not only stock, right? They also derivatives, right? Uh, they also do some commodity trading. Sometimes it depends on their mandate. So
Hmm.
conservative or not is a matter of style. It's a matter
I see.
that they get from their end clients.
Hmm.
The end clients are willing to put their money into a more riskier asset, then why not, right?
Hmm.
But you are an insurance company or you are an asset management company who sell mutual fund, right? You need to make sure uh, you manage the risk properly. You manage well.
Hmm.
You don't want to get into a too risky kind of asset. So it's a matter of style and mandate given by the end clients.
Hmm. Oh, is that why there's like different packages in hedge funds? Like if you see there's in Ray Dalio's hedge fund, there's alpha and then there's all weather. Yeah, if I'm not wrong.
Correct.
Hmm.
They one product, right?
Yeah, yeah.
Give you different result.
I see.
It's a mandate basically. It's a strategy. It's a different strategy. It's a different mandate.
That's cool. How about like insurance though? Wait, is it if I'm not wrong, is it floats like the ones they manage the money with? Float? Their float?
Uh, can you say that again?
The float of the insurance companies. Is
Uh,
that the term or am I wrong?
so this insurance company, you get money from your end client who pay the policy, right? That means that you you cannot risk this money. You cannot you can't afford to lose this money. Basically, that's why you need to have a proper risk management uh, process
Hmm.
for you to. There are some certain procedure, right? When it comes to investing, right? You need to have a risk parameters. You need to also have the procedure, the process,
Hmm.
which company that you can actually invest. I mean, like these days, a lot of company actually don't invest in coal stock anymore because everybody is going into ESG investing. ESG stands for environmental, sustainability, and governance. So they are away from a company who still produce a high amount of carbon.
Hmm.
The coal mining companies. Another one that I think a lot of people are actually avoiding is tobacco companies.
Oh, really?
So the appetite from all these investors are actually shifting, right? There are
That's true.
behind that. So, I mean, if you look at a company like Sampurna and Gudang Garam in Indonesia, they're losing because many of these foreign investors are actually not coming in, even though they give you a good amount of dividend. You know, I think a lot of Indonesian people still do smoke, right? Just, you know, I think the mandate from the end clients, hey, I think we need to move to ESG. So the parameter of sustainability and environmental becomes important, and they need to comply with that.
I see.
With Sharia investing, right?
Yeah.
There are, if you have Sharia product, you cannot invest in banks. Why? Because in Sharia they perceive bank, conventional bank, is not Sharia compliant, because you lend money, right?
That's good.
Some interest from lending it, and it's not Sharia compliant.
I see.
So it depends on the mandate from the product itself and also the end clients.
Okay, so can we move on to the next question?
Sure.
Okay, all right. So are institutional investors always investing for the long term? If yes, why? If no, why not?
Again, I think it depends on the mandate from ends, right? I think at the end of the day, investors are seeking for yield, right?
Yes.
I think if you decide to invest for the long term, it's because you have a philosophy, your investment style. You believe in the company's performance in the longer term. So I think at the end of the day, right? I think if your investment style is more like a short term, trying to find a short term gain, playing the momentum, but still can get a decent amount of yield, why not, right? But of course, with the higher transaction you do, that means that the transaction cost is also higher. So investors are actually avoiding it, high transaction cost. But again, to be fair, if you decide to invest for the long term because they believe in the company, I mean the company's growth, all the efforts by the management, all the efforts by all these employees, right? If you have some strategy that you need to work, right? I don't think it will be fruitful only in 1 month time or 2 months time, right?
Yeah.
In the bigger scheme of things. So I mean, you need to wait. You need to be patient. You know, I think at the very least 6 months, 1 year before the strategy to bear the fruits.
And that's for the case of institutional investing.
Yes, same thing with the individual investors.
Really?
Yeah.
Retail investors too?
Retail investors, if they have a mindset where they want to invest, right? They'd rather to invest for the long term.
That's true.
Because, you know, I mean, let's say you invest now, and you actually don't want to see your position on a daily basis because there are so much noises in between.
Oh yes, there is.
Noises because the stock movement is not linear. It's all volatile, you know. But if you know that the trajectory is going up, so why would you you know, trade your stock on a daily basis? You can buy the stock and hold it 1 year, 2 years, and then, you know, you sell it at high. So yep.
Yeah, so you think that's more profitable in the long run compared to like short term? What's your opinion on it? What's your take?
I think more stocks are actually Yes, it's actually at the end of the day it's more profitable because first your transaction cost is low,
Yeah, that's true.
right? And then and the main point is actually you try to assess the company, the business model of the company, right?
Mm.
The management, and then all the strength by the company's strength and weakness, you know it by heart because you analyze.
Yeah, analyze it. Yes.
Then okay, I take a long shot. I believe in this company that it can grow, in the next 1 year or 2 years. Then you just buy and hold rather than play on the news flow.
Yeah, yeah.
Uh, so I think at the end of the day, everything will be back to fundamental. Fundamental meaning the performance of company itself.
Mm.
Definitely play on the momentum. You can play on the news flow, but I think with the amount of efforts that you need to put in, I think being a long investor is actually easier and more profitable.
That's true. Wait, so you're saying that there's more effort required to actually like short-term invest than there is to like long-term invest?
Yeah, so I mean, because you need to monitor your performance on a daily basis.
Yeah, yeah, that's true. Yeah, that's true. Hmm.
Monitoring those things on a daily basis, trust me, uh, it needs effort.
That's true. That's true. That's true.
Yeah.
I have a friend who invests in Bitcoin. I'm not saying Bitcoin's bad. I'm just saying like once he looked at his Bitcoin stock, Bitcoin prices like every 5 minutes, and he gets anxious every day. And yeah,
Right?
yeah, that's true. That's true. Oh damn. So like I think for like long-term investing, it's like more effort, but for short-term investing, it's more emotional effort. As in,
Correct.
you have more anxiety and more stress, right? Because there's more on the line. I see.
Yes, more efforts in long-term investing because you need to do the due diligence. You need to
Yeah,
assess.
that's true. Yeah.
You need to think about the strength, the weakness, right?
That's true.
Their chance to go from where they are to where they want to be. You
Mm.
need to put the regulation, the market dynamic. It might change uh, on a daily basis or on a weekly basis or on a monthly basis, right?
Mm, I see. Okay, so like moving back to the point of institutional investing, let's talk
Mhm.
about local and foreign institutional investors. Do
Right.
you think Indonesia's local foreign investors can compete with foreign ones in the near future, or do you think like Indonesia has still a long way to go in terms of institutional investing?
Of course, we could compete with foreign investors. Definitely, I think with the rise of technology, right? The free access of information from the internet, social media, and whatnot. I think uh, it makes us a par with the foreign investors. I think what distinguishes the foreign investors from local investors are actually they invest globally.
Mm.
They invest, so they've seen a lot of things in a global market, in a global aspect. So meaning if I'm a fund manager of ASEAN, right? I invest not only in Asia, but I also invest in Malaysia and Singapore,
So,
uh,
yeah.
and maybe to some certain extent Philippines, right?
Mm.
Then I see, you know, uh, probably a similar companies in other countries, and I try to learn it the similar companies also in Indonesia. Then I can take a view where I've seen this kind of thing happen in other countries.
Oh, I see, I see.
So you make that kind of comparison because you have a vision. You've seen something before, and then you think that, oh, okay, it might work here in Indonesia. So that's what limits the local investors
Oh,
because custom to see those kind of things. They haven't seen what's been happening
yeah,
outside
outside Indonesia.
because we've only been seeing Indonesia market only.
Hmm. Wait, are there local institution investors that like invest outside of Indonesia?
I don't think so.
Really? Oh wow. Oh,
I think by regulation you can't.
oh wait, what? You can? What?
Uh, Authority doesn't allow that. I think
Oh,
products that you can actually invest outside Indonesia, very limited option actually.
oh,
Amount of money that you raise locally must be invested locally as well.
mm,
It's not because all these institutional investors don't want to, but I think they have a limitation.
mm. Why do you think that that limitation is in place? Like, why do you think the law is there?
Why?
Yeah,
Why it's there? Well,
yeah.
I mean, uh, again, it's regulation. Why the regulator decide that way? I don't know. Maybe they want the liquidity here.
That's true. Yeah.
I think they also have some point. They want to keep the liquidity here because otherwise, who else is going to invest in our country?
Our country. Yeah, I see. Mm,
I'm not saying that decision is actually best for us as well, but it's just I think that's the reality, and I'm trying to understand where they are coming from.
I see. So while foreign investors have like the perspective of the globe essentially, like they've invested in multiple countries, local
Correct.
local institution investors can't have that much perspective.
Yes, but I think the advantage of being local is you know your country better
Yeah,
than
that's true. That's true.
right.
Mm,
So you know inside out. You heard news uh, about your country on a daily basis. I mean, versus foreign investors who don't really follow your market closely. Maybe they will take a look at it on a monthly basis or on a quarterly basis. They will do it again. So, there are some news flow that they might be missing out a lot.
That's good.
I think in terms of agility, I think local investors are more agile to buy, sell, buy, sell, buy, sell, because they hear the news
Yeah.
on closer. They are closer to the market,
Mm.
and they might probably know the management personally.
Oh, right. That's good. Yeah.
Unlike foreign investors. Oh, okay. I kind of know the management on a professional level, but I don't really know them personally. So, you know, they are taking a more longer term view, and try to have the perspective in other countries and try to bring it here. It
Mm.
it might not be working.
Yeah.
This country might have different uh, different dynamic, different
Yeah.
behavior, consumer behavior, different regulators might also be different.
Mm.
So there are a lot of factors that you need to consider as well.
That's true. Like from your experience with this institutional investing, do you think that like foreign institutions who try to, compare Indonesian companies with other companies, do they succeed in doing that? Like, do they actually find similarities in their patterns, or like are Indonesian companies almost wholly different from other companies in outside countries?
Some work, some don't.
Oh,
There isn't any set of stone rule. You
hmm,
know,
I see. Okay, so let's now talk about retail investing. So in
Mhm.
regards to retail investing, what advice would you give for me and other amongst the young generation who plan to invest wisely in stock market?
Start investing now. I mean, read.
Hmm.
Uh, I think you guys should read a lot of books, right? I think these days you can access a lot of it, right? I would suggest you to buy and read Peter Lynch books.
Oh, Peter Lynch books.
Peter Lynch is actually a fund manager of Fidelity.
Hmm.
So I think his wisdom I found is very very helpful. I heard you read about Ray Dalio's book as well, right? I think so. So read that book as well. I mean, the more you read, the better, because the more you might have you might see different perspective, different way of approaching market. So investing is about self-discovery, right? It's how to find the right approach, the right methodology
Yeah.
for you to understand the market. And I think you need, as a youth, right? I think, yeah, you just need to start early. Then you can get the sense of, how the market is moving. Because like an animal, it's like a living creature, basically. It develops over time,
That's true. Yeah.
and behavior might change over time. So it's a relationship that you need to build between you and the asset class that you want to invest. Same thing. Let's say if you want to invest in Bitcoin, right? Then try to understand why is it moving up, why is it moving down, or why is it stalling? You know.
I see. Wait, so you talked about self-discovery. Do you think that like a person's investment style is something that should be refined across the years until the end of their life?
Not the end of the life, right?
Okay, maybe not that. Yeah, but
But to some extent, I think probably a young people might have different style with a more mature individual, because their risk appetite might also be different.
oh yeah, that's true. That is true.
Experience that you gain might also different, because the more mature investor might actually see more things previously, because they experience up cycle, down cycle, right? I mean, although up cycle or down cycle are actually just a historical pattern, right?
Yeah, it is. Yeah, true.
Much statistic wouldn't determine your future. Statistic, yes, it will help you to approach the future, but there is no way you can actually predict something with pure statistic. I think if you read about Black Swan theory by
Oh yeah, Black Swan theory.
Talib, yeah, I think it's a good book to read. Basically, let's say this Corona, right?
Yeah.
Who
Oh yeah. Nobody.
I think this is a Black Swan event. I mean, tell me, I think there are tons of genius people out there that we think that this guy can predict the future. These guys are very visionary. Then I think, yeah, he or she can kind of know what's going on with the whole world. But in fact, Corona happened.
Yeah, true. Nobody knew. Oof.
So I mean, statistic is to understand how the statistic work, but remember, there's always a factor that you don't know for sure. Same thing in investing world, you cannot be 100% sure. I think it's definitely why people call investing is an art. It's not a science. If it's science, 1 + 1 is 2.
Oh yeah, that's true.
5 is 25. Definitely.
Yeah.
2. But investing is an art. There is no way if you buy at this, you will get there. No, I don't think it exists in investing world.
True. Is that the only reason why you think investing is an art, or is there like any more reasons that you think investing is more of an art than it is a science?
Uh, because if you can find a pattern and you can predict the future with that pattern only, then you can tell me investing is a science.
Yeah, I see.
And I think on that basis, I still think investing is an art. Of course, you need to make sure that all these controllable factors you need to count into your model. But there are some certain things that, hopefully you can figure out earlier, right?
I see.
With the very limited amount of information that we have, we are trying to predict the future. Basically, there's also a calculating part of investing.
Yeah, that is true. Yeah. So the investor's job is not to like predict with certainty that something is going to go up or down, but his job is to actually like control as much factors as he can, but the rest, it's up to luck.
Yes, the risk.
The risk, yeah.
Avoiding the risk, managing the risk, because risk is always going to be there.
That's true. Yeah. How else should one manage the risk? Like, aside from emotionally managing the risk, like what steps can be taken to manage the risk of one's investment?
If you have the right process, I really hope that you can. I really hope you can get a good result as well. With the right process, hopefully you can get a good result.
I see. Okay. All right. So next question is, what mindset or temperament would you think retail investors need for successful stock investing with consistent returns?
Patience.
Patience.
Yeah.
Yeah, all right.
Because market consists of fear and greed, right?
Yeah. Yes. True. I see.
Greed. Sometimes you are fearful, but opportunities might be fine when you are fearful. Actually, maybe an opportunity to sell are actually found when you are feeling very greedy. I think be patient and know what's enough for you. That's important. What's enough for me and what's enough for you and what's enough for the rest might different, right?
Yeah. True.
So I think that's why I mentioned about self-discovery, know yourself better, because if you heard that other people gain more return than what I did,
Ooh, yeah.
you'll be this where, oh shit, man, I'm worse than them, but not right. I think it's about managing your own risk. If you get enough and if you feel enough, then you need to be grateful.
So you're saying it's patience and rationality. So like, because the markets are always emotional, you should rely on your own analysis to see if this is really a good opportunity to buy or a good opportunity to sell.
Yes.
I see. And about the example that you just gave before about like seeing your friends get high returns, don't you think it's like a result of outcome bias, which I read from Daniel Kahneman, was like, when you see something that has good results, you think it's automatically having a good process, when in reality, not necessarily.
Correct.
Yeah.
Luck plays some role.
Luck plays some role, I see. So just because your friend has high returns does not mean he is a good investor necessarily.
I don't think so. Yeah. He might be luckier than you.
But do you think consistency shows how good your process is? Because if you're consistent throughout times and like you still manage to like stay successful, I think that like that shows that you're better than just luck, you know.
That's true. That's true. But I think again, if you feel like other people don't have a good process, but they keep getting those luck, that right? Hard.
Yeah, I see.
But definitely with a good process, you might yield good result,
Mm,
and hopefully in a consistent manner as well.
I see.
And for you and enough for them, hopefully, yeah, you if you think that this is enough, yeah, enough, right?
So, yeah. Oh, I see. So like by like being grateful of having enough and like actually maintaining your rationality, I think, don't you think it's kind of like the contrary to like gambling? Because I heard like when some people gamble their money and then they win something, they won't stop. Like they don't stop at like winning that something. They won't take it and go home. They will just like continue like risking more of their money to win bigger. Is it the case? Like, is it the opposite of what that is? What you're
Well, it's the fear and greed, right? I think if when you do gamble, right, and then when you win the money and you keep you don't stop, right?
yeah.
It's your greed that dominates you.
Hmm.
But in investing world, right? If you think that okay, this theory has been working well, and okay, I might get the money off the table now, and you might probably just wait for another opportunity. You don't need to bet your money all the time.
Hmm.
You wait until the right opportunity come to you again, or you bet your money on other sector,
So yeah.
asset class. Whereas for a gambler, right, I think let's say they are a good gambler in poker,
Oh
and
yeah, poker.
they keep playing poker all the time, right? And they keep winning this poker game. Yeah, it's greed that dominates this gambler basically.
Yeah.
They might different set of card. He might probably lose on the next game, right?
True. Yeah.
Because in gambling, the cards are always random.
Yeah, yeah, that's true. Yeah, it's not like specified. Hmm. I see. So, what are the actions, like the exact actions teens can take to begin their investing journey? Like, as you said, like read Peter Lynch books and then learn from this person. What other actions do you think, like we as the young generation can take to start investing early?
Right? Read, open an account,
Hmm.
probably with the help of parents, right? I think you can start an account and securities company, brokerage, then start to explore and you know start investing. There is no other way to be a better investor.
Then to start investing, yeah.
You need to start investing as early.
Hmm.
You gotta feel how you need to have a sense of the market. You
Hmm.
build this relationship with Mr. Market, basically.
I
Like
see.
I said, market is like a living creature.
Yeah, yeah, most definitely. Huh.
Same thing. If you want to become a property investor, right?
Hmm.
How would you learn? Oh, you need to learn how to build probably how to understand how the property developers build a house, and how the property developers buy a land, and how do they make money. So I mean, try to understand the business model. I think, let's say you go to the coffee shop, right?
Yeah.
Just play a hypothetical game. Hey, how many visitors coming to this coffee shop? Yeah.
True.
Calculate. Okay, each person might spend 60,000, one cup of coffee and one croissant, right? And then okay, what's the cost of this one cup of coffee, one shot of espresso, 250 ml of milk, one cup of paper cup, how much does it cost? And then try to do some hypothetical game, when you run a business, and you can start to get, this is how company actually generate their profitability. Or start your own business, so you kind of know this is how it looks like, to run a business. Let's say an e-commerce business, right? You might have some product that you believe that people might buy from you, and then you start to, okay, this is how to market the product and how to market the product. So there are a lot of ways to actually start understanding the market. Market is just a name, right? Basically, go to wet market is pretty much market. You know how the stock market form? Actually, it's by VOC.
Oh, yeah, I heard, yeah, right.
VOC, basically with all these commodities they get from Indonesia, they try, right? How do they sell it? Yeah, they have it on board. Oh, okay, 1 kilogram of whatever price at this price. That's how the stock market form. It's a market. It's a supply and demand, right? There's the price, volume and price.
I think when you said before that the stock market is a living organism, I think it's really, really true, because like essentially the stock market is like a really big group of people, right? Is it not? So like all that group of people combined with all their emotions, whether it be like euphoria or mass panic, it's basically a living organism by itself, right?
Yep.
Has its own personality in a sense.
Correct.
I see. About what you said before, when you said that like there's no better way to learn to invest than to start investing, just like get into the stock market itself. Do you think that's especially true when trying to like manage your emotions? Because like the how do I say, street smart, being street smart in stock investing, isn't it also like mainly learning how to like manage your own emotions, your fear and your greed? Because you can't really get that from reading books, right?
Correct. That's true. Very, very true.
I see.
Same thing like for your own personal development, right? When you face some disappointment, when you face some
yeah, true.
happiness, you feel it, you experience it, and you think about it. You try to reflect what you experienced that day, and on the back of your mind, maybe unconsciously, right? You try to, okay, why do I feel this way? Why do I feel that way? And you just learn about yourself better.
About yourself. Oh, I see. So this is why you said self-discovery before.
Yeah.
I see. So like you discover how you truly work as a human being, like how you feel in certain things, and you know, like what emotions you feel. Yeah.
A lot of good investors are actually not coming from a business background.
Really?
Probably some are actually coming from philosophy or even history.
Oh, philosophy.
Yeah,
Wait, who came from philosophy?
Peter Lynch is actually a philosophy major.
Philosophy major. Oh. How about history? Who came from history?
Well, you need to understand the history, right, of this
Yeah,
company,
that's true though. That is true.
of this market,
Hmm.
why it happened that way.
Well, I'm so curious though. How did Peter Lynch become a successful stock investor when his major was philosophy? I'm confused.
That's why you need to go.
No, because like I mean, like philosophy does teach you to like think deeper in a sense, doesn't it? To think in more ways than one, at least.
Yep.
Hmm. Is that what you think he gained from philosophy that he transferred to stock investing?
I think so.
Hmm. So just learning how to think.
Yeah.
I see. Okay. Wait, so which do you think will be the best type of stock for a beginning investor to start purchasing? Do you think it'll be blue chips, second liners, third liners, or do you think it like wholly depends on the risk tolerance of the person?
I would suggest, just take a look at the LQ45. I mean, I think pretty much it's blue chip companies.
Hmm.
To begin, right? You don't want to get a shock effect where
Yeah, that's true. Yeah.
the share price moves so wildly, right?
Oh, yeah.
Starting from this LQ45, right? I think it gives you some. It's been filtered already somehow. So you, from the risk management perspective, right? This 45 stock are actually a better stock compared to the rest of
Yeah.
500 stock in the market. But will it LQ45 give you a better return than outside this LQ45 companies? Not necessarily. But in terms of risk management, I think the stock exchange has thought about it.
Hmm. Let's see. Wait, so is the LQ45 just a collection of like the biggest companies in Indonesia, like blue chip companies?
Yeah, liquidity 40. LQ
Oh,
is.
liquidity, I see. Also the most liquid. Ah,
Yeah.
hmm, interesting. So like you suggest for beginners to start investing in blue chips first, like LQ45 companies in if you're in Indonesia. But if they're like in a foreign country, they can invest in like big companies instead of
Yeah.
like the small ones.
Buy Nasdaq probably and S&P 500, right?
That's not too far. Yes, I see. Hmm.
I think one of the reason being LQ45 has LQ for Indonesia has LQ45 is because I think adapting to other countries as well, right? Oh, okay. S&P 500. Oh, probably this is
Ah,
the better 500 companies among thousands, right? In the US,
I see.
100, right? I think this is the 100 companies, technology companies that are actually better off than the rest,
Hmm.
or measured stock somehow.
Measure stock? What?
Measured stock. I mean,
Oh,
of the criteria.
I see.
It is investors to pick
Hmm.
the
So it's like,
risk.
yeah. Wait, the risk?
Risk is more measured. The risk is more measured.
I see. So like lower risk.
Yeah, again, to avoid that volatility, right? The wild volatility.
Yeah, wow, volatility. Whew. Have you tried investing in wild volatility stocks yourself?
I have.
Oh, you
I
have?
have, of course.
Wait, what was your experience investing in high volatility stocks?
Not only it had a high volatility, but it went bust, right?
Oh, ah,
I get burned, basically.
ah, oh, oh. Wait, what company was it? Ah.
I don't think it's appropriate, right?
Oh,
To
okay. I won't mention it. I won't mention it.
there's
Okay.
a small medium company basically that I try to,
Mm.
and I get burned. It is. I mean, do I regret? Yeah, kind of, but a lesson learned.
Yeah, that's right. Whew. How painful was it though? Like it went bust, just like bust.
It went bust. Yeah,
Ooh.
big time, right?
Oh God, that sucks.
Lost your
Ooh.
money. Just imagine, your parents give you $1 million, right? You thought
Yeah,
you can buy this toy, you can buy this book.
yeah. And then,
The thief came and robbed you, and
ooh.
yeah, right. That's how you are gonna feel.
That's true. Yeah. Is that what you not get from like reading books? This is like the pain of like seeing your investments, some of them at least, like just bust. I think that's good experience, honestly. Like learning how to handle the disappointment that comes.
Yep,
What do you think? What's your take?
you can't find it in any book, right?
Mm.
You that's it.
Yeah. I see. Hmm. Okay, so wait, from your experience in the field, what are the key players and like parties that play an important role, aside from the investors themselves, of course, in the transactions of the stock market and stock investing in general? Like, i.e., like brokerage firms, and there's investment banks, market regulators, and what roles do each of these parties play?
Right. Well, I mean, like for a brokerage firm, right? Pretty much as a broker, uh, they give you the at usum value, what stock to buy, what stock to sell. They provide you the access to all these companies, management as well, right?
Oh.
Leaders basically they set some rules that you need to comply. That you need to play it by the book. Regulators are just regulators, right? Pretty much.
Regulated, yeah.
Then I think the companies itself are actually important because that's the fundamental of the stock itself, right? The stock
Oh, yeah.
price,
Yeah, why, yeah.
the performance of the company. So understanding the business model, understanding the management,
Mm.
the business direction is going is very important. So I mean, apart from the investors itself, right? I think investors are the one who owns the money, right? Manage the money, who allocate the money, and they want the yield out of it. And I think the best way to get the maximum yield, yeah, you need to have a good investment process, good investment, and you make good decision by understanding this company, this business model, and yeah, hopefully you can maximize your return.
Cool.
So understand the business model, know the management, know the business, know the competition landscape, know whether the business model is changing or not, right?
Yeah, true.
I think give you another example of electrical vehicle, right? I think it will be a real competitor of a combustion engine car.
Yeah, definitely.
We all will drive some electrical vehicle. That's change, right? I mean, the change that you really feel. Same thing like Nokia.
Oh,
I don't
yeah, Nokia got like disrupted. Yeah.
Nokia, but I think After Nokia, you get BlackBerry, right? And then BlackBerry, everybody use BlackBerry. Now, no one use
No
BlackBerry.
one uses BlackBerry.
So understanding the dynamic, the here is also important. Oh, back then, no one drive Grab or Uber or
Yeah.
right taxi
Only
car,
taxis. Yeah.
comfortable position.
Yeah. Then suddenly,
They make so much money, and then all of a sudden, parties trying to cut the price, right? Better value.
yeah.
Oh, okay, it's all the same. I mean, what I need is the mobility, and this Grab and this Uber and GoCar can provide me the same result, the same service that I need. So why not, right?
So,
Understanding the changes that happen.
yeah. I see. Wait, but since changes are actually some part of it is a factor of luck, but some part is controllable too, right? Do you think it's helpful to gauge, to measure how innovative a company is? Because like if you see the taxi companies at the time, they weren't really exploring new boundaries of getting their customers more value. And then Uber came in, right, with their own business model that disrupted the whole taxi industry.
Right.
So do you think it's important? What's your opinion on it?
Of what?
Whether a company is really like striving to innovate or to push the boundaries of their
That's
industry.
that's actually one of the important part that you need to figure it out as an investor, right? Understanding the behavioral change, right?
Yeah.
But also understanding the possibilities going forward. Same thing, like you know, back then we only use Walkman,
Yeah.
cassette, right, to listen to.
Yeah. So.
And then iPod came,
Mm.
right? Its own device that we need to bring to listen to the music.
Yeah.
But it's gone. It's all the mobile phone, one mobile phone, right?
Yeah.
You can listen to the music, you can watch video, you can make a call. Exactly what you're saying, Rafi. I mean, how the company can strive to keep innovating,
Everything. Yeah.
to cater to the consumer need, delivering the best product, the best value. Because at the end of the day, I think all consumers are seeking the best value of everything.
Yes, definitely. Yeah.
You don't want to pay 10 million rupiah for Nokia these days, right?
Oh no.
I mean, you just rather to buy Oppo, this Chinese mobile phone, maybe at 1.5 million rupiah, 2 million rupiah, but you can do more. Oh, versus BlackBerry, for example.
Alright, that's all for today. Thank you for watching, and for the record, the recording at the end was cut because the internet connection was kind of troublesome, so yeah. But anyway, thank you for watching, and goodbye.